Welcome everybody to this research seminar with our own Ilja Viktorov, who's going to speak about the rise of collateral-based finance and the state capitalism in Russia. So Ilja is a researcher here and also at the Department of Economic History and International Relations at Stockholm University. And has been involved in research here with Janine Wedel on the project Modern Vikings in the East. And he wrote his thesis on the crisis of 40s and wage earner funds in Sweden, actually connecting to the talk we had last week here. In 2007, you received your PhD with Leif Runefelt and Lars Ekdahl as supervisors. And you have published quite a number of papers on financial market regulation in Russia, which is one of your areas of expertise and which we will, I hope, hear more about today. Very welcome. The floor is yours.
Thank you, Gustav, and thank you for coming here. So my area of specialization now is political economy of Russia, and primarily political economy of Russian finance. And during today's presentation, I hope that we'll learn not only something new about Russia, but also generally about to get better understanding what modern finance is. That it's not like it's presented in textbooks probably. That is so such issues as repo trading, which is central to contemporary finance, what is collateral-based finance, and so on. So the title is the following: The Rise of Collateral-Based Finance and State Capitalism in Russia. And it deals with mainly, its main standpoint is that Russian finance represents a clear case of an emerging market economy, at least before February 2022. It was where most advanced practices of global speculative finance merged with the increased presence of the state in the financial sector. So it seems to be quite incredible, but that is exactly what had happened. The state is engaged in financial issues and in the state institutions, state representatives, state banks, state-owned corporations, and engage into speculative financial operations to maximize profits, simply. So yes, and this paper has a co-author, Professor in Finance Alexander Abramov from Russian Academy of National Economy and Public Administration in Russia. We cooperate quite fruitfully in a number of issues. So to begin with, there are lots of definitions of what state capitalism is, and elements of state capitalism can be found nowadays basically in many economies, even advanced capitalist economies also. But as a system, it has been under analysis mainly regarding research on the largest emerging market economies, such as China, which is a classical example of state capitalism, India, Russia, Brazil, and to lesser degrees other markets like Turkey, for example. And the leading group today is the group of Professor Andreas Nölke from Goethe University in Frankfurt, who study finance under state capitalism. We cooperate closely with his research group. But in this paper, we apply an operational definition of state capitalism. It's an economic system where the state owns key assets and controls the main financial flows. When state-owned business entities act like quasi-independent market players with primary purpose of profit maximization. And this moment of profit maximization for state-owned actors, it's quite important. It's essential, absolutely. So this is not, state capitalism is not a developmental state like it evolved in post-war East Asia, Japan, South Korea, or Taiwan. No, it's something different, because developmental developmental state presumes that both state-owned, the state as a coordinated agency, and private-owned agents, companies, corporations cooperate in favor of economic growth for developmental purposes. But state capitalism is something about different things. Certain developmental moment within the system is always present, of course, but it's also more about existence of self-supporting power centers, not least in economy, state control and state owned, that exist for profit maximization, or and also very important point, which I will return in the end of this presentation, is the impact of informal power networks on these developments, which use state-owned institutions, companies, and banks to promote their sometimes political agenda, but also their particular interests, business interests, political interests. And so we see that the same happens in Russia today also.
So Ilja, I guess there's a lot of suppressed premises here. The thing about there's a market for labor where salaries are determined by supply and demand. There's a market for goods where for it, I mean, state capitalism cannot just be defined by that.
Absolutely.
There's a whole background of assumptions of markets where prices are determined that. There wouldn't be state capitalism, for example, if you had no market for labor, where salaries were determined by supply and demand.
Do you mean that if...
Well, usually when you define capitalism, you have a lot of more things than you have in
Yes, absolutely. Beyond finance, absolutely. I agree totally with you.
So this is a version of the only thing is that you adjust for the fact that you have state-owned key assets and...
Yes, because there is this approach that I think that it has been advanced by Andreas Nolte and his group, a large research group. So they study not only finance, they study also labor market. And regarding labor market regime, it's these countries are basically characterized by low paid labor market regime. So it's not about by and large increasing of living standards for the majority of population or relying on welfare state. Not at all. Not for the entire labor force. So it's a low wage macroeconomic political regime, and also research and innovation policy and so on. So absolutely, state capitalism is not only about finance, it's about much more broad issues. But in this particular case, we study finance still. As I said, beside the presence of the state, which I'm going to show how it happened in the financial sector, it's also Russian inclusion in the global process of financialization that we define, and the rise of financial sector as a source of profiting at the expense of development and profiting of the real sector of economy, productive sector of economy. This is a global process that started in US and in advanced capitalist economies, and then it spread to developing and emerging market countries. So how it happened in Russia? So the cornerstone of financialization is also disintermediation of the banking sector. It's transformation of bank-based financial system like it existed in continental Europe, post-Soviet state, and post-Soviet states, because post-Soviet states traditionally inherited the continental bank-based system like it evolved in Germany historically. Into so-called market-based banking, if we borrow this definition from Ian Hardy and Sylvia Maxfield, who developed this, so provisions of credits to enterprises is not the main purpose of banks' activities. not anymore. Instead, they rely increasingly on risky short-term market operations. Banks borrow from the market and lend to the market. And their assets and liabilities are defined on mark-to-market practices, so they're very unstable on market sentiments, which creates that at the core we see the fundamental market instability of this activity and the entire financial system. So in general, the difference between commercial banks and non-bank financial intermediaries, such as investment banks, like it used to be in the United States from the Great Depression until the abolition of Glass-Steagall Act under Clinton administration. So so these differences have blurred by and large. And if we yes, and this instrument that is absolutely central for the process of finalization as it evolved during the last 3 decades and in Russia during the last 2 decades is the instrument of repo. So the repo is used as a form of lending involving the sale and repurchase of marketable collateral assets at a given time period and price level specified by contract. That's what. And trading collateral makes possible extensive exchange of assets and large-scale liquidity flows. So introduction of repo enables to increase the volume of speculative operations in the financial market, exchange of liquidity, increased short-sightedness. The funds provided in the financial markets are very short term. Often, in the case of Russia, it's overnight money. And so it's much more about liquidity management and leverage trading involving risky speculative strategies for profit maximization. So the main purposes of monetary policy have changed also. It's nowadays is to manage liquidity through the provision of so-called safe collateral. Why so-called? Of course, the safest collateral is United States treasuries, where during the time of distress, all global investors flee to save their assets. But also nationally and even in emerging market countries, the governments and monetary authorities try to create such safe havens, local state bonds. And we know that this is made with varying success or failures. We saw the Eurozone crisis about 10 years ago, how it unfolded in Europe. And speaking about Russia, the first attempt to create such safe collateral finally led to a crash in the financial market, and when the state declared default on its so to say safe collateral, namely state bonds, which made a deep impact on the involvement of the financial system. So in Russia, yes, so the main role of the central bank changed from being the lender of last resort to being the dealer of last resort. And recently, for example, we saw it clearly during the time of quite short time of financial distress in September in United Kingdom, when the primary objective to protect stability of the UK financial system for Bank of England and for state regulative authorities was to stabilize value of underlying collaterals, state bonds, but also corporate bonds. In Russia, state-controlled financial institutions have actively participated in this transformation towards collateral-based finance. They introduced repos. First, before they crashed in the 90s, it was a very short-term episode, but then quite purposefully and consequently, starting from the early zeros. And it's interesting when those elite networks that promoted Russia's inclusion into financial globalization, when they took control over the central bank of Russia, after those groups that promoted more relational banking, old relational banking, would be preserved. When relational banking, what is it? Relational banking is when you see when we can see the close ties between the real sector of economy, the corporations, and the banking sector. That is the bank-based continental model, and that is what basically was destroyed in Russia already in the 1990s. And here the first figure. Investment structure fixed capital for Russian companies by origin, and we see that the main source of investment, it's not banks. Banks correspond as a source of investment for companies. They correspond about 8-9%. So it's basically, I wouldn't say it's nothing, of course it's something, but banks are by no means the main source of investments for companies. They need to rely on own funds that they access or save or in a different manner. Then public funds, state money are also important source, more important than banks actually, for financing, especially in defense industry, of course, in such areas. So this situation, which when I talk, for example, with researchers on financial sector in Brazil, which reminded very a lot what happened in Russia, they said it's exactly the same that happened that you can see, for example, in Brazil. So this disintermediation, the source of this disintermediation should be searched in the early 90s when international advisors that helped Russia to create financial market basically advocated the breakup of close ties between the real sector of economy and the banking sector, under the presupposition that banks were unresponsible in terms of providing credits to ineffective large Soviet enterprises that the Russian economy inherited after the planned economy. So this was quite purposeful development. What would happen instead, what these advisors advocated, that first and foremost, the banks would start to provide credits to new companies that would be subjected to market discipline. We see that this didn't happen. And the second, that newly emerged capital markets would provide also capital to companies. And we see here in this red, the share of capital markets as a sort of investment. It's basically non-existent. So this promise was never fulfilled.
Ilja, perhaps you could just mention how it would look like in Sweden or US? How this structure would look in Sweden or US, so we can compare. We know it looks like that in Brazil too, but what would a more normal distribution look like?
I didn't study Sweden specifically, but there is an interesting study that compares United Kingdom and Russia. Yes, that was made actually by the Bank of Russia, and they used methodology that was elaborated by Bank of England. And it showed also that even in the case of United Kingdom, there is also a great source of disintermediation. The share of banks is larger, certainly, than in Russia, but not so dramatically larger. And of course, the share of capital markets is much more larger than here. But basically, also, even in United Kingdom, the companies need to rely to a great degree on own funds, even though not to the same degree as in Russia. So again, I would point out that what happened in Russia in terms of finalization, it's a global process. It has only its peculiarities locally. Some are common for emerging markets like Brazil, Turkey, for example, but some are very specific for Russia, which is not surprisingly. All countries are specific in some sense. Here we go further. It's the rise this is a figure on the rise of repo trading in securities on the Moscow exchange. And one of the interesting peculiarities of repo markets in Russia that they exchange based. So this is a quite unique for contemporary market, financial market, that repo trading has been concentrated mainly in stock exchange, and it made it easier to make statistical observations also, of course, because of this reason. Because over-the-counter markets, they are quite non-transparent, and it's very difficult to collect statistical data on this in this respect. So we see the rise. So the rise of repo trading. It is basically speculative finance, because it's one of the indicators of speculative finance, should be fed by some kind of inflow of liquidity. And during, for example, the period before the global financial crisis, the source was global money as a part of the process of carry trade. And then when the market crashed, that was a pretty standard story that happened throughout the world due to the run on repo, as everywhere basically. And it didn't start in Russia. But after that, Russia started to develop these peculiarities in flow of state money into the financial sector. And there were different periods of this. One interest period is between 2011 and 2015, when the Central Bank of Russia injected liquidity into bank sector, into financial sector. Why it's interesting? Basically, it was made as an attempt to imitate quantitative easing, unconventional monetary policy in Russia, in an economy where the national currency was not a reserve currency. And it was why it happened. We described it in another paper on the financial crisis 2014. It basically destabilized the system. Interestingly, it was made against recommendation of the International Monetary Fund, so it was a kind of local invention. And because what I would say, the practices of speculative finance applied locally in Russia became much more and more sophisticated. But the core of these activities was already evident in the 1990s, namely that the macro, because finance, it doesn't exist in vacuum. It always, even though financial sector representatives not always paid attention to the real sector, but it always finally depends on what happens in the real sector, and namely that macroeconomic policy regime that was created in Russia in the 90s, which meant the liberalization of capital flows, full liberalization of trade, and exposure of Russian uncompetitive productive sector to competition from abroad, meant that basically considerable part of the Soviet inherited industry was demolished. The industrialization took place, which meant that so the structure of economy became much more simplified. This means that basically when financial start, each time financial sector, or like state authority, the central bank or the minister of finance, they start to inject liquidity into the system. This liquidity is not transformed into investments or credits to banks. This liquidity goes into financial speculations, undermines stability in the currency market, or is exported through cross-border capital flows abroad to offshore havens, tax havens. This is pretty standard situation. And this happened exactly in the year 2014, when these injections led to a very large, one of the largest currency crises in the Russian financial markets, amidst the Crimean geopolitical crisis and also the decline in oil prices. Then the monetary authorities learned lessons after that crisis, and the new period started, when instead the Ministry of Finance started these liquidity injections. And in this case, they succeeded much more, not in terms of increasing crediting of companies, because the liquidity provided to the largest state-owned companies was not channeled either to a great degree into investments, but instead it neither destabilized financial system. This huge liquidity pool of liquidity became locked inside the financial system. We show how it happened. So this is comparison between exchange-paid versus over-the-counter repo markets in Russia. And as I said, the money that circulate inside these repo transactions, repo markets, are quite short-term, absolutely. It's basically overnight money for exchange-based repo markets, basically purely speculative finance. You cannot provide a long-term crediting to enterprises based on this, but over the counter repo markets here, it's a little bit different story. It's actually very opaque market in Russia, and it deals about exchange of large pools of liquidities between state-owned, the largest participants, mainly state-owned banks, state-owned corporations, and so on. And here maturities are slightly higher, but it's a closed system which is basically closed from other participants, like minor banks or minor enterprises, small companies. Which is also quite characteristic for Russian state capitalism and its finance. Everything should be quite large, filled with state money, and quite closed for outsiders. Here, as I said, another characteristic feature of the Russian collateralized based finance is the lack of safe collateral. The state monetary authorities developed it during the last decades, the office the bonds, but after that crash of the state debt market 1998, but still corporate bonds correspond for the most part of collateral traded and accepted in repo trading. Here the data how trading with securities became much more and more used for trading in repo markets. So a clear tendency in regarding equity market on the Moscow exchange, but also this tendency is more visible regarding the corporate bond sector. So it's also, of course, provokes a question. It raises the question: is also how the price of the securities is defined when only a very little part of these transactions are market-based transactions. Also, what the price of these securities, which can play an important role during the time of financial distress. And here also we see how the rise of secondary corporate bond market was conditioned by inflow of state liquidity. So it's not basically performance of a company that issued debt that played the most important role for this rise, but another factor. Here this tendency broke for a while, for a time, due to crash of Открытие Bank and buyout program of the Russian state. Открытие Bank was like lots of things in Russia, it was controlled by important political insiders who basically lost their impact and lost their bank finally. Most of securities traded in Russian market are issued by state-controlled or companies, or what we define as companies with state participation. Here, their share in the total domestic equity market capitalization. The tendency is also very clear in the corporate bond market, how the share of these companies with state participation increased. And also, here is a figure of outstanding value of ruble-denominated corporate bonds. And what is interesting, we see how actually state capitalism can adjust to changes and to crises in financial markets by in time of distress. So after the Crimean crisis 2014 and the financial crisis that took place, the share of so-called non-market the issuance of non-market corporate bonds increased dramatically. The issuance was meant to be kept by specific holders with large who could provide large volumes of liquidity, and it was not intended to be traded in the market. So then outstanding value of ruble-denominated bonds and Russian corporate eurobonds. This tendency witnesses about gradual decoupling of Russian markets from global financial flows, which is interesting. So it didn't start in February 2022 now, after the start of the war with Ukraine. This tendency is much more long-term. Because corporate eurobonds, it was mainly outsourcing of this segment of market abroad, when Russian securities were issued in euros and traded outside Russia. And what happened after this, since that time, after 2014, is the rise of ruble-denominated corporate bonds. And more important, statistics will not show this. But what happened then was also that the main owners of corporate eurobonds, instead of non-residents, Russian insiders became the main owners of the securities. They can appear as investments from offshore registrations like Luxembourg, Bahamas, or Cyprus, but in reality, it's also Russian actors. Yes. And here is the data on the existence of monetary overhang in the banking sector. Here we see the inflow of liquidity by the central bank, its culmination during the financial crisis, 2014 currency crisis, and then the reverse of this financial policy when liquidity, state-originated liquidity, was injected by the Ministry of Finance, where it didn't lead to any large overflow of this liquidity into currency markets, but stayed locked within financial system. Here also subsidiary of, so it's huge volumes of liquidity, up to 10 trillion rubles. Here, for example, an important subsidiary of the Russian Ministry of Finance, the Federal Treasury, it also uses the rest of budget funds that are accumulated on their accounts as a kind of pool of liquidity that provided, of course, only on short-term terms, like overnight or 1-2 days at best, to other financial market participants, where the Federal Treasury earns money also on these activities. It's purely speculative practices. Here also the data for monetary overhang in the largest publicly listed companies. To collect this data for all companies is impossible, of course, but for publicly listed companies it's possible. And we see here again the same pattern, that the most part of this liquidity is concentrated on accounts of state-controlled companies. So this is where money exists. So there is plenty of money in Russia. That's not the question. The problem that it doesn't reach the real sector of the economy in form of credits. And banks basically shouldn't be blamed for this, because if they start to issue credits to these companies, so basically lots of companies would not be able to pay off these credits. It depends on the macroeconomic policy regime that exists in Russia. So banks act, I would say, rationally by involving into financial speculation instead of crediting the real sector. The problem is not only with financial sector and banks, but with the entire macroeconomic policy regime and Russia's particular inclusiveness into global financial flows. So here is the main tendency after the crisis 2014, and this is different trading modes of repo transactions with securities. And we see here the main tendency in the increase of the share of trading of repos with the central counterparty. So very few people probably in the general public are aware about existing of this institution, the central counterparty, that is usually performed by centralized by central clearing houses, which can be state or privately owned. Of course, in Russia, it's not privately owned, but state-owned. It's a national clearing center controlled by the Moscow Exchange and the Russian Central Bank. And the main point was that after the global financial crisis, the global authorities, financial authorities, and in the largest core capitalist economies, what I would say, what critical political economy demonstrate, they did not, of course, tried to renegotiate the foundation of the global speculative finance that led to the crisis in 2008. But instead they wanted to repair inside the system to make it more reliable. And that's the reliance mainly on the CCP. To make it as credible, as safe as possible. So during the time of financial distress, there would be no run on repo and crisis of an insolvency, bankruptcy of the leading financial institutions, like it happened with Lehman Brothers, 2008. And basically, so far, this strategy has worked. But of course, and it worked in Russia also. It worked during later the COVID crisis, which is not the time that started with COVID crisis is not for attention of our paper, but still. And it worked recently during this turbulence in the financial markets after the start of the war with Ukraine also. So this works, and it works in the West also. But basically against until what time this CCP trading will work, we can question. I actually attended this CCP community in the European Central Bank, and it was interesting to listen to how basically because no CCP can provide guarantees against so-called waterfalls when the entire due to financial distress, the entire this pyramid of repo trading would fall. No CCP can do it. So to what degree this system will be resilient? So there are lots of questions that that exist inside this community also in the financial market infrastructure. And the main novelty, which I would say that started in this year, starting from 2016 and later, it's novelty that did not have a corresponding developments in global markets. It's introduction of trading with general collateral certificates. Here it started to rise. What is it? This is basically a securitization of repo markets. Securitization not in terms of security studies, like it's applied in international relations, but securitization in terms of finance. So basically, what still was done, what and still is done as a part of repo with the CCP, is that market participants create a kind of basket of securities that can be interchangeable and exchanged based on mark-to-market practices. Of course, it's hugely unstable system, hugely. And when different type of securities can be interchangeable inside this basket, depending on the rules of acceptance of collateral, so-called haircuts during repo transactions, and so on. But in Russia, the Moscow exchange, I would say it's absolutely inventory, absolutely, that went a step further and introduced this general collateral certificates that kind of, I would say, became quasi-money inside the repo markets. So the National Clearing Center issues a general collateral certificate, which is exchanged can be exchanged against liquidity or securities valuated based on mark-to-market practices, with corresponding haircuts applied. Haircuts like this is a difference between the market value of a security and the money, the liquidity cash that the owner, the lender, that the borrower pays for the security. Because repo trading, it protects mainly interests of lenders at expense of borrowers. This is also one of the sources of instability in the market. And then market participants can use these certificates to exchange on all kind of securities, to access liquidity on very short-term basis for hours. Why not, for example? And everything is, of course, to make this system with repo trading as liquid as possible, to increase trading volumes, to make profits on short-term basis. And at the center of this process in Moscow, in Russia, we find a state-owned and state-controlled Moscow exchange that supervises all this process, also makes considerable profits on this. Of course, what this entire system can work, and it still has been working, but against the question that can be raised is of the quality of collateral accepted. It's general question, not only it's question of general relevance. Not only specifically Russia, but specifically for Russia, for example, here the data on including on debt service defaults of the Russian companies on Russian corporate bonds. And in times of distress, it can happen that the collateral accepted for repo trading, for issuance of general collateral certificates, for example, simply the default will be declared on this collateral. And it happened previously, but so far the Moscow exchange and Russian CCP applies quite conservative policy. At least this policy demonstrated that it could be resilient during the time of distresses, both during the COVID time and during the recent turbulence this year. Yes.
So you're quantifying two things here in this.
Yes, it's
the number of defaults and the amounts, and I'm just a little confused because they're like the numbers.
yes, it's different type of defaults. Different type of defaults.
Yeah. So what's on the y-axis? Is that number of defaults? Or?
Yes,
Okay,
number of
so-
defaults. It's not volumes. It's number of defaults.
Okay, and the amounts in rubles?
No.
Billions?
No, we didn't count it. Only the number of defaults. Sorry.
Right at the bottom it says total outstanding amount in billions of rubles.
Yeah, sorry. Yes, of
Okay.
course. But I see here, yes. Here the number of, and this is total amount. Yes, I'm sorry. So here's also this data.
Okay. So that's also numbers of defaults.
Number of defaults are marked by here. Number of defaults in black and number of defaults
Okay.
in red. So in black it's number of defaulted issues, and the number of defaults.
I can read that part. I just was confused about the last box.
Total outstanding amount defaults.
Yeah. Right. Okay.
Yeah. So this is here. Yes. And what is interesting, what had happened during that crisis is that the number of that company defaulted not only because they could not pay, but also because they didn't want to pay, basically. Yes, because what we call informal practices in the Russian market, it's it's still visible and still survives this.
It's okay. It was just a simple clarification question about the amounts versus the numbers, because one is defined in terms of amounts.
Yes, thank you for the question. Yes, sometimes also it's quite it's so huge amount of data to have in brain that sometimes I start to also to it can be quite complicated to grasp this huge reality, basically, also. That happens because my method actually is in cooperation with Alexander, co-author of the paper. So my method is we collect data and then I go and make field work and go to financial market participants like investment bankers, traders, and ask them the question, what's happening here, what this numbers tells about. And they can tell something that no statistics will reveal, of course. So fieldwork helps a lot in this respect. And the main conclusions now. So what we found here is a existence of self-supporting system of capital markets where an area of domestic securities circulate inside through a repo mechanism that underpins liquidity flows between the main participants, the main state-controlled companies, banks, government agencies. I named, for example, the Russian Federal Treasury as a subsidiary of the Ministry of Finance, the Central Bank of Russia, and so on, and the remaining private economic agents. So all of these participants use happily possibilities for making short-term profiting on all these transactions. At the center, we see the state-controlled Moscow exchange of this complicated system of liquidity flows. And basically today, one of the most promising direction in the study of political economy and finance is to study these electronic platforms, stock exchanges as electronic platforms in developed economies, in developing economies, emerging markets. Absolutely. So this is a global tendency in that sense, but not in all countries. Of course, these stock exchanges are state-controlled, like in Russia or China. Expansion of trading with general collateral certificates signals about a merger of practices borrowed from global speculative finance. On the one hand, with post-Soviet Russia's domestic evolution towards state capitalism and its practices, and again, the existence of the monetary overhang witnesses about that the monetary transmission mechanism of transforming liquidity into credits to enterprises, that it basically doesn't work in Russia like it has not done during the last 30 years. So this is the main conclusions of the paper, but I would like to say some words also about maybe not the current situation, but the relevance of what was created in Russia after 1991 for the most recent developments. So this figure is borrowed from another paper on a financial crisis in Russia that we published before And here it reflects basically a quite simplified macroeconomic policy regime and its connected financial system in Russia. So what we see here, we see that Russia has been a net exporter of capital abroad. So all this huge billion of United States dollars testifies about the loss of economic resources, the loss of capital for Russia, loss of possibilities for its economic growth. But on the other hand, we see also that the current account is in surplus. And that depends on that exports of hydrocarbon resources, or gas and oil, helps it offsets export of capital abroad, and it provides a kind of so it basically saves the country, because if you look at these indicators, it's GDP per capita in United States dollars and current account balance except oil and gas export value. We see it's actually mirror developments. I was surprised when I computed this figure, how it mirrored really. So Russia, of course, without access to these huge pools of liquidity through export of hydrocarbons, would be much poorer country. And it became poorer each time the global oil prices decreased. So we are currently writing a paper on what happened in the Russian financial markets after February 2022. And what is most interesting is how the system became resilient towards these huge challenges. And first and foremost, that Russia became basically cut from global financial flows, because this system, as it evolved after 1991, was not for benefit for Russia. It was for benefit for core capitalist economies and those interest groups, global interest groups, who control global offshores. This story of cooperation between Russia and global offshore centers, mainly UK controlled, of course, but also continentally controlled, is not new. It didn't arise in 1991, but has also historical roots in the what happened in the late 1960s. So a kind of inter-elite interaction started at that time. So when the West introduced all these sanctions in the financial sector, it basically cut the ties with the global market that were more beneficial for this particular global interests or offshore centers than for Russia. This can explain in part why there was no crash of the financial system in Russia during the recent year. But it should be explored more, of course. It's just a preliminary remark. So thank you for listening. I will be happy to answer your questions.
Thank you very much, and welcome to the question and answer period. First half hour will be filmed, and since we both have audience online, and here we'll tell that you online, you use the chat function to ask a question, and we have two types of question: hand for a new question and finger for a follow-up. And also, if you're online and if you're here, we like to mix from different areas, so please state your discipline also when you ask your question. So we're ready for question. I might start and ask a kind of general question that was not in your talks. This might be an unfair question, but
yes.
I'm interested. How does this, everything you describe here now, how does that connect to the power structure, this changing power structure in Russia and the rise of the oligarchs? Is there any connection at all?
Yes, it's a very good question. And we actually finalize our paper with a remark that this unholy alliance between global speculative finance and this hard control of the state over financial flows, this is a temporary phenomenon. It cannot exist forever and will end in some way in the future, because some elite groups, oligarchs that you named, but not only them, of course, advocated more this inclusiveness, and they created it also politically. Inclusiveness of the inclusion of Russia into global financial flows, into global markets, on the one hand, and the other elite groups who are connected, associated, but associated with so-called Putin's Siloviki, representative of security services. Of course, they were more in favor of increase of these tendencies towards state capitalism. So we conclude this paper with the remark that it will end up in some kind of solution, but we could not anticipate, of course, that this solution, so to say, will be so brutal finally. No.
But has it been an important part in, so to say, the rise of this powerful groups, that they can then use it for moving money abroad or for getting money in, or how have they kind of exploited this system to their own advantage?
Inside Russia, it's profiting.
Okay.
Absolutely. That is what repo markets are about: short-term liquidity management. But for export of capital, yes, they moved this money abroad to offshore tech centers, and moreover, a considerable part of these capital outflows, it was also the Central Bank of Russia had a statistics that was at least accessible for the public until February 2022 about kind of questionable, as it was defined, questionable transactions. Yes, and in 2013, the resigning chairman of the Central Bank of Russia, Sergei Ignatieff, made a very remarkable interview officially to the leading business newspaper in Russia, when he said that there is a group of people who transfers tens of billions of dollars on regular basis abroad, and that the Russian enforcement agencies should be interested in why it happens. No consequences, absolutely. Only said and yes, and resigned.
Okay, we have a question from Bo. You're gonna get a microphone.
I'm a real ignorant newcomer to this field, but can you explain to me what is the difference between a collateralized market and if investment goes to what you think it should go to? What is a collateralized market? In your last slide, you said this was the main problem.
The main problem is that collateral-based markets are mainly about financial speculations. To increase trading volumes, to make profits, short-term profits in. It's not about investment in the real economy. While money should go to development of the real sector. And this is provided mainly not through sophisticated financial products. It's provided basically by existing of close relations between the financial sector banks and companies, either through the direct presence of the state, and it's basically, it happened historically in developing markets like Tsar Russia before the revolution, for example, where the state channeled directly financial resources to companies, or privately through existing of powerful banking groups that establish close ties with companies. And when the credit is provided, when it's based on basically on existing of trust between the industry and the banks, like it used to be in Sweden also before, because we have this also powerful financial conglomerates, financial industry had at least.
So, Bo, you satisfied? Yeah. Even though you have
if I may follow up, I was once invited to Central European University in Budapest many years ago, before all the problems started, when the financial tycoon George Soros had donated a lot of money, and he wanted us to start a center for the imperfections of democracy.
Yes.
And I study these things, so I of course came. But he said an interesting thing. He said, I made all my money understanding the imperfections of financial markets. And so is this speculation that he has been doing, is that something you could think of as collateralized markets? He has basically been doing his money in understanding why some valutor currencies were underpriced or overpriced.
Yes, but I would not probably call it as imperfect markets, because all markets are framed according certain premises and interests of vested elite groups, quite powerful groups. So they probably worked exactly like it was thought by their creators. What creators do not want, of course, that the system will collapse. But practically, what the main contradiction in contemporary finance, that what we have here is existence of huge volume of transactions, a system that, so to say, supervises around that these huge volumes are fed by inflows of liquidity, exchange of liquidity, and so on. And huge profits are made on this. But this system is highly unstable. It may crash in the time of financial distress. And such distresses will happen again in the future. It's naturally. Like it happened in the past.
So then we have your colleague there, so we can send the mics there.
Thanks. I'm Lars Arnland. We're colleagues at our Department of Economic History and International Relations. I think an interesting question would be, I mean, you talk about possibilities of a crash, a future crash, but we see currently the situation at the moment. What would you say, how likely would you say there is a possibility of a financial crash happening quite, I mean, in the close future, considering the situation we have now and this fragile and unstable financial system?
It's not unlikely that it happens, but we cannot predict exactly when it happens. But it maybe it happens sooner than we can anticipate it or predict it.
And also, what do you think about the possibilities of a dealer of last resort now, if that is Bank of Russia or the Minister of Finance or whatever?
Specifically for Russia?
Yeah.
Well, they actually, in terms of keeping stability of the system, they perform quite positive role, I would say. Of course, all these outflows of capitals, because this creation of reserve funds, for example, they have been locked in the West now. And these groups have been accused for, who control the central bank and Ministry of Finance, for that they, for treachery of the state interests, for putting of this hundreds of billions dollars. But at the same time, I don't think that it's justified to say, because they adhere to a certain paradigm and that they indoctrinated in. And it didn't arise just from nothing, because there is a very interesting study of Juliet Johnson about priests of prosperity, about central bankers. And she showed how these values of the speculative finance, of the so-called modern finance, modern central banking, based on modeling that we know does not pretend crisis nowadays. How this thinking was implanted in emerging markets like Russia. So she takes three post-communist countries: Russia, Hungary, and Kyrgyzstan. So they are schooled in a certain paradigm, and they view the world from a certain perspective. So of course they exported this huge pools of liquidities and investment in this reserve fund, so sovereign wealth fund. But on the other hand, these huge pools of liquidity of foreign origin have been locked now inside the Russia, of Western investors also, because the BlackRock team, for example, arrived in February, just 2 weeks before the war, and said that there would be no war and it's quite safe to invest in Russian assets. So basically, in terms of a key policy rate that was increased dramatically directly after the war, and then decreased also and came to its pre-war level now. So it was quite reasonable policy. But the problem is that they're quite reasonable, the Russian monetary authorities, in terms of management of the system, but they're not capable to question the foundation of its existence. That this system is not beneficial in terms of development of the real sector, and it's general problem for contemporary central banking, not only in Russia.
Last question. What do you think is the scope of quantitative easing for saving a possible crash? I mean,
yes.
Bailing out, and I mean the inflation is about 15-20% in Russia now, right? So wouldn't they? Are they afraid of quantitative
actually
easing at the moment?
it was. Sorry, can you finish your question?
No, just are they? What do you think are the scopes for monetary easing in Russia at the moment with this kind of high inflation in the event of a financial crash?
Well, inflation, it was high in spring, but now because the ruble exchange rate strengthened much towards the United States dollar, unexpectedly for basically everybody, I would say. So the ruble is very strong. Of course, this does not depend on that the economy is strong, on other factors, but the fact is this. So the inflation it slowed considerably during the last months, but how it will develop, it's difficult to predict due to geopolitical circumstances. And so your question was that.
No, the scope of the possibilities for monetary easing, quantitative easing.
Yes, I understand you completely. So far, the Russian states. Again, what we see now, or what unfolds in Russia, is it raises quite fundamental question about what money is and who creates money. Who creates money? So before February 2022, basically Russian ruble was a subsidiary currency to United States dollar, I would say. Which meant that each time you increased ruble liquidity, it led to inflation, to disturbances in the currency market. But now these ties to the global capital flows are cut, and dollar cannot be used as means of transaction or store value inside Russia. So basically, the Russian monetary authorities can now increase injections of liquidity, and theoretically, under certain conditions, it can lead to economic growth when this connection to the global market is cut. But again, the question arises of the quality about institutions, about what I call informality, informal practices, fraudulent practices that are well spread in Russian financial sector, in Russian industry, like in any other emerging market. So the situation is very unstable. I wouldn't make any predictions actually. It's more important now for me, as I see the task as a researcher, is at least to explain what has already happened during the last year. It's already a very difficult task, because during the time of distress, it's also very difficult to access reliable statistics and access information. And a lot of statistical data, for example, has been concealed now from the public, both by Moscow Exchange and by the Central Bank of Russia. And of course, just to meet financial market practitioners in Russia now is a challenge. Just to get there is very difficult now. And those who immigrated abroad, I see how they lose the sense of the market, because they do not reside anymore in Russia.
Okay, so next is Julia.
Okay, thank you for your talk. So I'm no expert on financial markets, so my question is going to be just a clarification question about the first graph that you show, where it was represented, or you show the share of types of capital over time. So Gustav made a question about this at the beginning.
This graph.
Yes, exactly. So
Yes.
I had a question about the organization's own funds that represent more than 50%. And you said when you were talking that you thought that was remarkable, and that these funds were, you said, literally kept in different ways, and sort of smiled when you were saying it. So I wanted to hear a little bit more about that, if you could elaborate. You said it didn't look that different in the British case, or in the when this was made by, like, the same estimation
Yes.
was made by the Bank of England, but that it was higher in the Russian
In
case.
Russia, it was definitely higher. So in Britain, it was like this probably, and a larger share of bank and of banks as source of capital, and of course, larger share of capital markets, much larger. But by and large, also nothing to be proud about, I would say, in terms of provision of capital by banks to the industry. So your question is to explain what does it mean, organizations own funds?
Yeah, and why is it so
And how are they kept?
prominent exactly?
Yes, it's
What
a
are the ways in which you said they were kept in different ways, but you did not elaborate on that?
it's a basic statistic from the Russian Statistics Central Bureau. So they do not explain what the source of these own funds are. But of course, I made fieldwork now for 12 years in Russian financial institutions. And of course, you can learn a lot of during this fieldwork, how the system works. I would say it's profits, companies' own profits, of course, which is quite self-evident, but also kind of sources that are accessed by yes, because some capitals of criminal origin of the 1990s. So these people now looks very civilized, and especially in the regions. So Moscow is quite modern today, on the surface at least. But in the regions, very interesting things happen. So the origins of these capitals that now invested in companies in Russia, in the regions, can be very obscure. Absolutely. And if you start to dig the origin of particular group, where they get this capital, it can be dangerous even, especially in the regions. So it can be whatever you want against in this category. What is more interesting for me, I always wondered it and never could get an explanation, is what are the others? What is it? Other sources. What is it? I cannot. I wouldn't be able to provide an answer. And all practitioners I asked, they don't know exactly what is others. It should be asked to those who collect this statistic. But there are great problems with statistical authority in Russia also, because they basically provide a picture of economy that doesn't correspond to reality, by and large. Especially when you deal with up-to-date statistics, with a lack of 2 or 3 years, it can be clarified more and more. But it's a huge problem. How inflation is measured, for example, what a type of economy, and so on. So it raises huge questions. I remember was in presentation a representative from the budget department of the city of Moscow. They have huge budget, and they said that the statistics that we get from the Russian Statistical Central Bureau is not reliable. So we created their own statistics to learn what economy of our city is, of Moscow, and they showed completely different picture of where the main revenues come from and so on. And they said we tried to communicate with the Russian Statistical Central Bureau, but with no success. So we use it internally for our purposes, this alternative statistics, but So far, it looks like it is.
So if you were to speculate about the other sources of funding, would you have any? No.
I don't know, unfortunately. Yes.
I follow up on that. So to one small question, might not be so important, but organizations' own funds, how are they kept? Are they kept in current accounts, or are they invested in a stock market, or, I mean, where are they held?
Well, this shows a source of investments.
Yeah.
So mainly companies has much more, not mainly, they have much more financial resources that are not invested. Also, there's also a problem. Why? Especially, so Russian economy has been stagnating basically since 2012. So, and the problem was also why companies did not invest money into economy. Some started to export capital abroad, like production of agricultural technology that was moved from some Russian regions to Canada, and so on. So this is the final result. This diagram shows. While you ask about generally about more important general situation, what Russian companies do with their own funds. Not all of them are invested, unfortunately.
No, of course not.
No.
Okay, so follow up on that. Others. I mean, I thought that other would be this kind of money that you don't know where it's coming from. That is illegal money, but that's not your speculation.
It could be only my speculation. I don't know, unfortunately.
And how does that look when you look at other countries like Brazil or UK? Is there a big other there too, if you have a similar diagram?
Brazil, I didn't see the diagram, maybe because it doesn't exist. I only talked to researchers, first and foremost, Anina Kaltenbrunner, who from the University of Leeds, who makes research in Brazilian financial system. But I saw, I don't remember if this was actually reported in the British statistics. I may check it for you if you are curious about it.
Yeah, I am.
Yes.
There might be no other because they have complete information, but I don't know. Because this might be just incomplete information.
But if it was quite insignificant probably, because I wasn't surprised at anything when what I was surprised regarding the data from Bank of England, that still the share of this organization's own funds was very large, large. And the banking neither perform any significant role in UK either. But this is a result of the financial disintermediation that I talked about. The banks engage in financial speculations instead of investing into the real sector.
Good. Staffan, a microphone to Staffan.
Thank you very much, Ilja, for this interesting presentation. My name is Staffan Julian. I work here with communication at the Institute, and I'm also a documentary filmmaker. So I have a kind of follow-up to Gustav's question about the oligarchs. I think we in the West are very focused on the power still of the oligarchs.
Yes.
And people were thinking when we did all the sanctions after the war started, that if the oligarchs will be hit very hard, then they will press Putin. But what I understand is that since more than 10 years the oligarchs don't have so much power. And I just read, and I'm thinking if this is in connection also because I just read now the Mikhail Khodorkovsky's last book, The Russian Communism, and I mean he was, before he was imprisoned, he was advocating a lot to that the big companies, Russian companies, should be global and open and transparent. And it seems like he lost the battle for the Silovik, for the state authorities. And is that what you see now, when you see that it's growing, the power structures inside the...
Thank you, Staffan, for this question. It's very interesting to hear about what Khodorkovsky wrote, especially about his very, so to say, informal practices that he applied in his own businesses, both oil and banking. To begin with, after the default 1998, most of documentation of Menatep Bank that was transported from Moscow, the bank that Khodorkovsky owned, that was transported from Moscow to St. Petersburg, was sunk into a river. This car was sunk into the river, lorry, due to an accident. That, of course, was just an accident. So the entire archive of Menatep disappeared. And this is quite correct. It happened all the time when he created his business empire. I would say, basically, oligarchs cannot influence Putin because they lost a considerable part of their political influence. It's a kind of remnants of the 1990s. They had a huge impact until 2008 and especially until 2003. Of course, because Khodorkovsky was also arrested based on a kind of he was too even among other oligarchs he made too much, so to say, against their interests. So there was a kind of consensus about his imprisonment, unspoken consensus. So no, oligarchs cannot influence Putin at all. What groups can influence is part of Siloviki factions. It has factions that represent the former security services and who are labeled often in the Western media as Putin friends, which is not true. There are no friends there in reality. And many of these groups are very discontented with these cuts of ties with the global market. They actually advocate close cooperation with the West. So to think about that, there is a monolith cemented group of Siloviki who wants to create a Russian empire and cut it from the West and so on. This is a mistake. There is no monolith group of Siloviki who does it. But this, what I would call still political, real political struggle inside Russia, it's not visible on the surface.
But still, I mean, even though they are not one entity, there is a strong power structure around Putin and his alliance with economically, the interest of the close people to Putin. Isn't that the case?
Yes, but also that depends on how you define oligarchs and who are oligarchs.
Yeah. Okay, thank you.
Very good. So then we have Eric.
Okay, so first a question of clarification, perhaps. So when you say speculative finance, what exactly you say? You said that it's not invested in real.
Yes.
But
when the finance fits itself,
trying to insure yourself against currency volatility would count as what, speculation or not, or where do we draw the line between trying to hedge your investments from speculating on prices?
So can you repeat the last question, the very, very last?
So if I am, I don't know, I'm producing something real.
Yes.
Say a car, very real, but I export it to the West, but then because of currency fluctuations or because of input price fluctuations, I need to insure myself. One way to do that is to buy certain financial instruments.
Yes, you can do it absolutely, and it works also.
But how would you classify that?
Yes.
How do you separate that possibly productive?
It's very simple. I didn't make my own research, but of course I talked to financial market representatives a lot, and I posed this question actually that you asked recently, how we can define it. It's basically you can see the share of hedging that is used to protect companies against currency fluctuations, and the derivative instruments that are used purely for speculative purposes, which are much more dangerous than repo pyramids, actually.
So which ones are purely used for speculation?
For purely speculative purposes.
Which instruments would that be?
Derivative instruments, like futures. I'm not specialist on these issues. I
think they can also be used for insurance motifs. I'm not sure.
Yes,
I'm not saying they are always.
Not only can be used, they are used for this. But the problem is the share of in total number of transactions, the share of this, so to say, of these hedging instruments to protect against fluctuations in currency markets from those that the same instruments can be used for different purposes. So basically, there is no wrong with repos. No, absolutely. The problem is how they're used.
Eric's question is, how can you see what is the market that is used for speculation and what is the market that is used in some more proper way? How do you know this?
That's a good question, and you need to look at statistics, for example. But regarding derivatives, I never did this investigation. I only relied on professionals, market professionals, who see the market from inside. Yes, and as far as I understand, first, the derivative market, the hedging, is not so well developed in Russia at all, maybe fortunately. And second, that except for some periods, it's not used for this, what I would say, productive, positive purposes that you mentioned. Although there were some episodes, mainly during the crisis 2014, that they actually were used for these purposes, when there was a great volatility in the currency market. So this is not the problem with with the instruments as such, but how they're used and how they're regulated. Instruments are just instruments in financial innovations. The problem is rather how they are used and applied.
Very good. So if there are no more questions, join me in thanking Ilja for this talk.
Thank you.
The next seminar is November 23rd, Bo Rothstein, Populism, Epistemic Democracy and Equality Government. And then we have December 7th, Sede Hormio, Individual Emission Equality and the State. And then on December 14th, we're going back to finance, Erik Wengström, intended and unintended consequence of financial incentives. Very welcome.